Hey, good night, traders. Another special edition, special request for this one, SPY. I know a person who's trading this, and they're very worried of what's going to happen. Is it going to go down? And I told him this morning, my friend, I think you're going to go down for a little bit. And why did I say that? I mean, it's simple. It's not even, it's common sense. If you was in this trade from back here, all right, when this happened from this high of 213, this is SPY, all right, this is the spiders right here. So when you look at this right here, you had this high, the stock came here, try to test this high, it fell, it pulled back. So that means people who trade this bought it down here, and the moment you bought it down here at 204, all right, and the moment you get up here at this 210, 212, you have to sell this stock. Okay, you don't have to. You can wait for it to make a big move, but if you look at the history in the last couple of months, all right, you see the pattern, the zigzag, the wave. All right, it goes from 200 to 212. So what is the price range of this stock? All right, so it doesn't matter what I'm trading. Like I said, it's the same concept all day long. So this was see this wick right here, this high, this fake wick. Okay, I'm going to try to get right on top of it and go right before this high right here. So from here is my price range. I'm going to look to trade. All right, so this is basically what I'm looking at. Okay, so, and the reason why I draw the box, so you can see if you're, it kind of help you see if you're leaving which side of the box you're on. If you're on the top of the box, all right, or if you're on the bottom side of the box. So right here we're on the top side of the box, and you can see we have resistance right here, and we cannot penetrate outside of this box. We've been stuck in this box since going back to last year. Earlier this year we tried to break it and barely broke it. Right here you touched it, you broke it right here by a few dollars and straight back down. So what do you expect? Just looking at the history of this, this stock, but this ETF, when you look at it from this perspective right here, you see the moves. It's calculated move, $10 moves, $9 moves. You should be in and out of this stock, and so when you look at it from here, it had a nice little run in the last 2 weeks. So what do you expect for this week to happen? I'm expecting this to go from here, better yet, excuse me, but I'm expecting price from, because we keep having resistance here, to come back down here somewhere. All right, maybe it will test, all right, this 200-day moving average, but I'm expecting price to come back here. Okay, why? All the news out of China, Greece, all those things are behind this right now, and the market kind of accounted for those news, as you can see, between these 2 weeks. So this is late June and this is early July, and today's July 21st. So as you can see, early June, and again this is July 9th to be exact. You started on a nice uptrend. So for the last 2 weeks you've been enjoying this nice run up. All right, so now it will be time to take profits and see where does it bounce. 38.2 is right here. So will it bounce off the 207, or will it continue going higher? I do not know, but this is the update I'm doing for you guys. And if I took a look at QQQ, and QQQ look almost the same, identical. As you can see, this is the price range right here, but QQQ broke the new high, all right, a few days ago, which was yesterday. QQQ had new highs yesterday. So do you expect QQQ to keep going up? All right, like I said, I do not know. With Apple having an earning miss, IBM, all these tech guys, you have to be careful what you're doing. Okay, so right here, I would not be a buyer up here at this high, for the simple fact that you've been on a run since the 10th. On this one, since the 10th, the 9th, you've been on a nice 2-week run. So what am I expecting? I'm expecting a nice little pullback from this 114.39. Okay, so QQQ, these are all ETF funds. What was the other one I looked at? SPY. All right, and I'm gonna go into a day chart with the SPY. And as you can see, if I remove my box, everything is kind of looking. Let me remove this box for you guys. All right, so now you can see what I'm looking at. So when you look at the SPY and you look at, you know, this, just remember the dash is the new year. See right here? So either way, I'm sync on both screens. So let's look at, you know, what they did. This is the beginning of the year. Zigzag down, down, and then boom. All right. So as you can see, they're kind of mimicking each other one way or the other. And this is why, like I said, I tell people sometimes, it doesn't matter which one you're trading. It's like you just got to pick the one you're comfortable in, the ones you're comfortable trading, and you trade them, all right? And if you don't want to trade those, like I said, there's a few other ones that you can trade: gold, GDX, USO, XLE, XLB, even the silver, SLV, XLF, XLK, FBT, XLV, IYR, and QQQ. We're going over right now, even the diamonds, DIA. So, you know, I said, I mean, it doesn't make a difference. Oh, I forgot. And the futures, the ES, the E-mini futures. All right. So, you know, you have to find one of them that you like or you're comfortable with, and you pick one of those that we just went over. The ETFs all mimic the market. ETFs, the only good thing about them is you have sector rotations. So when pharmaceuticals are bad, then you have the techs are doing good, or healthcare is doing bad. The other one is doing good. You know what I'm saying? So that's why these ETFs help you not to take a big loss, all right, when you don't know what you're doing. So for those of you guys, you know, who had the questions on SPY, QQQ, hopefully I answer all the questions for you guys. And for any other further questions, feel free to send me the email on the number 3, the letter D, consult me. So, peace.